Welcome to today's market report. European stock markets are set to open higher on Wednesday, boosted by signs of a global economic recovery, although gains are likely to be limited ahead of key US employment data. DAX this morning in Germany traded 0.6% higher, CAC in France climbed 0.7%, FTSE 100 rose 0.8%. US manufacturing indicators pointed to an expanding sector on Tuesday, with the reading from the Institute for Supply Management hitting its highest level in nearly 2 years. Eurozone manufacturing activity also grew last month, despite Spain slipping back into contraction, while Chinese factory data signaled rising global demand for exports, a sign the world economy is recovering from the pandemic. Meanwhile, the US Federal Reserve has indicated that its accommodative policies will remain in place for some time. Fed Governor Leo Brainard said on Tuesday that the central bank would need to provide more stimulus to fulfill its promise of stronger job growth and higher inflation. With this in mind, investors will be keeping a close eye on the ADP Research Institute's August jobs report due at 12:15 GMT ahead of Thursday's weekly jobless claims and Friday's official US monthly employment report. The ADP report is expected to show gains of 150,000 from private sector jobs, a hefty jump from 167,000 in July. Turning back to Europe, German retail sales provided a negative surprise, falling 0.9% on the month in July, and June's data were also revised downward. In corporate news, Unilever said today it would invest €1 billion to eliminate fossil fuels from its cleaning products by 2030. The banking sector was also in focus after the Swiss financial supervisor said it has opened enforcement proceedings against the Credit Suisse over a 2019 spying affair in which it hired investigators to track a departing manager. The Danish financial watchdog was also launching a probe into Danske Bank over its handling of debt collection errors. Oil prices posted gains today, boosted by a larger than expected drop in US crude stockpiles and signs of recovery in the manufacturing basis of both the US and China, the two largest economies in the world. Crude future this morning traded 0.9% higher at $43.16 a barrel. Brent rose 0.9% to $45.98 a barrel. Gold futures fell 0.4% to $1,970.70 per ounce. On the FX front, GBP USD remains heavy around 133.80 while heading into the London opening today. The cable printed the yearly high the previous day, but the broad US dollar recovery snapped the run up afterward. Also weighing on the quote could be the Brexit woes due to the differences between the British and the European Union negotiators during the unscheduled information discussion of Tuesday. Moving on, the pair traders will keep eyes on the BOE Governor Andrew Bailey from fresh impulse, while the US ADP employment change can also entertain the market players. Yesterday, Downing Street has said that it will be difficult to finalize a free trade agreement with European Union before the non-deal deadline at the end of this year, also suggesting the bumpy road ahead in the negotiations are the chatters that Tories push for no adjustments to the fisheries bill. AstraZeneca begins the final phase of the coronavirus vaccine trials today. The news helped to keep the market sentiment positive, even as the Trump administration's sabble on China joins downbeat comments House Speaker Nancy Pelosi relating to the serious differences over the stimulus package questioned the market sentiment. Considering the recent pullback of GBP USD prices, traders will closely follow the US dollar moves ahead of BOE governor's speech. The euro-dollar pair is trading in the red near 119, having faced rejection above 120 yesterday, while Wednesday's 4-hour chart is showing that the pair exited overbought conditions. The correction in the dollar sparked by the late August publication of the minutes of the Fed's latest policy meeting illustrated that the US dollar was ripe for a correction. The dollar index inched up 0.16% at 92.390, having hit its lowest since April 2018 of 91.737. This is today's market news. Thanks for listening. We'll see you next time.